Good afternoon. This is Coach Mike, founder of Walk On Consultants. What do you guys think about my new background on the floor of the New York Stock Exchange? I kind of like the idea. It's giving me that feel like I'm really in the pitch trading. But I'm here to record the March 2024 session. If you guys did not attend the meeting, you missed a great discussion. This portion here is just a recording of the presentation, but the real value is in the discussion. So I would challenge you to make sure you make the next meeting in April, the first Tuesday of the month. So without further ado, let me just share my screen because last time I hit record, didn't share the screen. So this is a re-record of the re-record, but that's what happens sometimes. So let's make this happen. There we go. Okay, so as I mentioned, this is the March 2024 meeting for the Baltimore Stock Market Meetup Group. We always discuss stocks, the market, and the economy, and we welcome all investors from beginners to the more experienced. Everyone is welcome to attend the meetings. Like I said, I am your host, Coach Mike, and I focus on helping people get off the bench, get in the game of investing. Think of me as a personal trainer, but not for fitness, but for finance, where I'm going to help you do the work, but trust me, you're going to do the work. This is a culture or community of DIY investors. So I will help, but you're doing the push-ups. So I am your financial assistant. Let's put it that way, right? I always begin with a quote from my man, Benjamin Franklin, because me being a teacher and a coach, I believe this is the best way to invest. You need to be educated before you start investing your hard-earned dollars. As always, let me get a few disclaimers out of the way. This is not investment advice, although I do talk about stocks. I'm not recommending you buy a particular stock. You need to do your homework and make sure that the investment fits your risk profile. Speaking of risks, right? All risks are not created equal, and there are two things I want you to know before you invest. One is, how risky is this investment? Some stocks are riskier than others, right? Some are growth stocks, some are, stable stocks, cyclical stocks. So you need to know how risky is the stock. And two, you need to know what type of risk you can handle. So your investor profile, your risk tolerance. Are you a conservative investor or are you a risky investor? Two really, really important things you need to know before you invest any money. And last thing is that from time to time, you'll see me sharing links from other companies. Just know that those are third-party links. It's not information from Coach Mike. These are third-party links. So let's get the show on the road. Today's topic, this month's topic, is about investing in China. Maybe it's something you're already doing. Maybe it's something you want to do, but didn't know how to do. So I'm here to show you a way to invest in China if it's something that has been on your radar, but you didn't know how to do it. So the first thing you do is you Google China, right? And what comes up, right? Some basic facts about China. And some of this stuff I already knew. I knew they were the most populous country in the world with over 1 billion people. But as I'm reading this, I'm like, wait a minute. It says the world's second most populous. I was like, second most populous? Like who's first? Like, that's crazy. I couldn't imagine who was first, right? And I looked at the map. I'm like, China is huge. Like, I can't imagine there's a country with more people than China, right? But some of you already know who it is, right? Look in the lower left, right? You see that country down there, right? To the lower left in gray? You guessed it. It is India. And this wasn't the case 2 years ago. Look how fast they have grown. So 2 years ago, China was the most populous. And now in 2024, India is the most populous. 1.428 billion people versus 1.425 billion people. So India with a slight lead over China. But combined, they make up, I don't know what, 30-40% of the population. There's only 8 billion people on the whole planet, and they've already got about close to 4 billion people. So, wow. But look at little tiny America there with 339 million people, right? These countries quadruple our population. So they might not be as advanced and may not be the economic powerhouse that we are, but you cannot ignore a country with 1.425 billion people. You just can't ignore it. So that's one of the reasons I want to talk about it today, is because the sheer amount of people that they have is a force to be reckoned with, okay? But we are still the leader, but you can't ignore that. So here's the easiest way to do it. If you don't know which companies to pick, go with an ETF. So you've probably heard me talk about the S&P 500, SPY, ticker symbol, the index for the S&P 500. Well, here's a similar thing. It's the FXI. There are 50 of the largest publicly traded companies in China, And on top of that, it pays a dividend of about 3.5%. So, hey, not a bad way to get paid a dividend while you're waiting for some growth to occur. So, same exact concept as investing in the S&P 500. Instead of 500 companies, you got 50, but it's still a diversified portfolio. So I always talk about diversification, right? And so here you see 57% of the portfolio is in these companies here. JD.com is sort of a cross between an eBay and Etsy and a Walmart, right? You know, they're recognized as one of the leaders of retail in China. And then when it comes to Google searches or internet searches, it's not Google, it's Baidu. So that's who Baidu is in China, right? So you get the sense that these are not small startup companies. These are well-established companies in China. Now, here's the breakdown as far as industries are concerned. And I was a little surprised that consumer discretionary was almost 34% of the portfolio. But then again, they got 1.425 billion people. So maybe it makes sense. I don't know. I know the S&P 500 consumer discretionary is not the leader of that group, but nonetheless, it is diversified, and that is what is most important, that you have a portfolio of diversified. Everything is not technology, right? So let's take a look at the side by side. The S&P 500, you know, technology is the leader in America anyway, 24%, versus the Chinese has, you know, 33% in consumer discretionary. So healthcare, we've got 13.8, and you can see they got 3. But both are really, really diversified across different industries, across different sectors. And I think that's key to make sure that you are diversified. So we've got 500 companies, they've got 50, but both are diversified. Now, here's where I'm having a little bit of problem, right? I look at 5-year history, right? Because we want to capture what happened before, during, and after the pandemic. Well, we know what happened during. Everybody fell. The pandemic was global. It was not limited to the US or China. It was a global pandemic. And you see the US market fell, the Chinese market fell. I didn't put up every market out there, but everything fell, right, in 2020. And fine. We bounced back. China didn't. And that's where I'm like, I don't know, man. This is bothering me, right? The S&P 500 was up roughly 17% per year, 86%. The Dow up 52%, low, basically 11% per year. And then China down 46%. That means they lost 9% per year. So the question I have is, does that track record present a problem, or does that present an opportunity? Has it bottomed out? You know, and I know you shouldn't be trying to pick the bottom, but is it now a good time to jump in? Being that it's down for 4 years in a row, we've already rebounded and they have not. So that is a question, you know, problem or an opportunity. It kind of scares me a little bit. Okay. Check out this video. It's only about 45 seconds. Check it out.
The Chinese government has set an economic growth target of about 5% for this year, in line with market expectations. The announcement was made Tuesday at the opening of the annual meeting of the National People's Congress. So what does about 5% mean? It signals that the government will likely inject some stimulus into the economy to try to boost growth. Not a lot, but a moderate amount. Many analysts are forecasting slower growth of around 4.5%. But they say that setting a lower growth target would have shaken markets and investor confidence. So now we'll have to see what the government does, from government spending to rebates to consumers, to try to get growth up to 5% this year.
So good points. The Chinese government is forecasting a roughly 5% growth in the country. They're going to do some stimulus spending, some tax rebates. They're going to try to stimulate the economy, sort of the way we stimulated our economy during the pandemic, right? So will that work? Who knows? But if you compare their projected growth to our projected growth, they're projected at 5%. We're only projected to grow 2.2%. So look at that. They've got quadruple the amount of people, and they're expecting 5% growth. So I think that's 2 pluses for the Chinese economy, the Chinese government. It all remains to be seen. It has to be proven, but the forecast is that 5% growth and versus the United States of 2.2% growth. So let's wrap this up here. Some pros, some cons, right? You've got 50 of the largest publicly traded companies in China. It is a diversified portfolio. Number 2, pays a dividend of about 3.5%. Number 3, they're projecting good growth for the country in 2024. And then here's where you get to like, I'm not so sure. being down 5 years in a row, or at least for the last 4 years, right? It averaged out to like a minus 9% per year. Like that's not a good thing unless you think that's an opportunity. Remember, trying to pick a bottom is a very risky thing to do. Okay. You don't want to catch a falling knife. And last, I'll say, and this is not a political statement, but if you invest money, you cannot separate politics from investing. The two are go hand in hand. If Trump wins, which I think he will, right? He's anti-China, he's anti-Mexico, he's anti-everything except America. So he probably will impose tariffs on China, which will probably hurt their economy when it comes to exporting their goods. So just something to think about, that if Trump wins, it's another thing that you can think about before you invest your money. But overall, I think it's got a little bit more pros than cons. Who knows if there's some things I left out, or I forgot to mention, or hey, let me know. Put your comments down in the chat of things to consider before investing in China. So what's your opinion? If this is a ETF that you don't own already, would you buy it? I want to know. Put your comments down in the chat. If you already own it, are you going to sell it? Okay. Or are you going to hold on for the rebound? That's the question of the day. Buy, sell, or hold for the China ETF. The symbol is FXI, trading around $23 and change per share. Let me know what you think. Put your comments down in the chat. Okay. So as always, what's in your portfolio? Monitor what's in your portfolio. Stay abreast of the news. You can always use alerts to set, to alert you when there's a upcoming news or pending news, or they release earnings on your stocks. And you got to make adjustments from time to time. I'm not a trader. I'm not telling you to buy and sell things in and out of your portfolio, but review the winners and losers and make some adjustments if necessary. If all of this is too much and it's overwhelming for you, book an appointment with me. I can sit down and we can set up a meeting virtually, and we can help walk you through what you need to do for your portfolio. I always wrap it up by saying that learning is a journey. It is not a destination. You need to keep on educating yourself no matter what you do. I am still taking courses. I've been investing since the 90s, and I'm still learning more and more each and every day. Speaking of learning, I am starting a online self-paced course, Investing 101. You will get access for 3 months. In addition to, you'll get access to the stock market game, where you can compete against your fellow students. $99 right now is the early registration fee. April is financial literacy month, so I'll be launching in April. Hit me up for the details, and I hope to see you in class pretty soon. That's all I have for today. Thank you for attending. This is Coach Mike again, Welcome Consultants. Wish you luck in your investing. But hopefully, if you take the course, it's not about luck. It's about being an educated investor. I'll see you guys in April. Thank you.